Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax, the deciding factor. Data from the Bureau of Economic Analysis shows U.S. gross domestic product totaled $26.8 trillion in the second quarter, up from $26.5 trillion in the first quarter 2023. Current trajectory would see nominal GDP in the world's biggest economy surpass $27 trillion by the end of the year. China, the world's second largest economy, has a nominal GDP around $19 trillion. U.S. annualized GDP growth, better reflected in real GDP growth to account for inflation, was higher at 2.4% in Q2 versus 2% in Q1. Compared to global counterparts, 2.4% growth is a win. According to Reuters, second quarter growth in the Eurozone is forecast up marginally at 0.4% after remaining completely flat in Q1, narrowly avoiding a contraction. In China, GDP growth is being targeted for 5%, yielding to a weaker growth rate than the 6 to 15% range they maintained from the 90s into the last decade. With China facing major structural issues like downturns in the property sector or youth unemployment estimated as high as 20%, Chinese leadership is stressed to improve domestic demand, specifically for autos, electronics, and tourism. A focus on domestic demand hints at China's desire to pivot into a modern consumption-based economy rather than their export-dependent economy of recent history. For comparison, China's trade as a percent of their GDP was 37% in 2021, while the U.S. trade as a percent of GDP is closer to 25%. Typically, consumer spending will make up 2/3 of a nation's gross domestic product. Consumer spending as a percent of U.S. GDP was at 68.2% in Q2, 0.5% above the 5-year average. The high watermark for this ratio came after the Great Recession in 2009. A clear difference between spending today and 2009 is the number of employed spenders. Weekly continued jobless claims averaged greater than 6 million per week in Q2 of 2009, maxing out with 10% unemployment. Today's job environment is a stark opposite, with continued jobless claims at 1.69 million per week, lower even than the 2019 average, reflecting pre-COVID levels. Rounding out the week with more good news, the S&P 500 stock index will finish higher for the third week in a row after retesting March highs. The spot WTI crude oil contract was also higher, up for the 5th week in a row after clearing above the 40-week moving average. Spot corn prices opened trade higher on Monday, but slid throughout the week to close 4 cents lower than the week prior. Thanks for watching. Remember to visit CattleFax.com to become a member or see the latest market news and analysis.